So I got an email from a Series 7 customer yesterday who's sitting in on one of those big cram courses that the big companies like to do, and apparently they lost several minutes to an argument over the burning question, is Fannie Mae a direct obligation of the U.S. government now? I'm not sure why the instructor either started that argument or let it go on so long, but let's see if we can answer the question. And today's date, by the way, is February 19th, 2010. So obviously people have heard that the federal government has stepped in over at Fannie Mae and have therefore concluded that they must be a direct obligation of the U.S. government. Well, let's see what Fannie Mae has to say about that. So it says about Fannie Mae, we're still a government-sponsored enterprise, just like your books say, chartered by Congress with a mission to provide liquidity, stability, and affordability in the U.S. housing and mortgage markets. Yeah, by purchasing loans that other lenders make, they provide liquidity, and therefore the lenders are more likely to make loans to people and at a better rate. They operate in the U.S. secondary mortgage market. We don't make home loans directly. We work with mortgage bankers, brokers, and other primary mortgage market partners to help ensure they have funds to lend to home buyers at affordable rates. And we fund our mortgage investments primarily by issuing debt securities in the domestic and international capital markets, exactly what you've been learning in your book. As you know, it was established as a federal agency during the Roosevelt administration, chartered in '68 as a private shareholder-owned company, and still is. On September 6, 2008, the director of the Federal Housing Finance Agency approved or appointed FHA as conservator. So this conservator is going to have power over Fannie Mae, and they currently do. They can just run the business, basically. The U.S. Department of the Treasury has agreed to provide up to $200 billion in capital as needed to ensure the company continues to provide liquidity to the housing and mortgage markets. So the federal government has provided liquidity up to $200 billion. They started out by pledging $100 billion. Now it's up to $200 billion. And the way that they did that is by buying senior convertible preferred stock, believe it or not. Let's see, where is that? I already have up Fannie Mae's most recent annual report. This is their 10K, and they just filed, this is the last one that went up. All right, so what is going on? I believe it's on page 8. Come on. Well, first of all, we noticed they have lots of different types of stock out there that's still trading on the New York Stock Exchange. One of them trades on Chicago Stock Exchange. There is common stock, and then there's all these different types of non-cumulative preferred stock, non-cumulative mandatory convertible, fixed to floating rate non-cumulative preferred stock. So the real world's always a little bit more complicated than it would be on the Series 7 or 65, etc. We can answer this debate pretty quickly, get you out of the way, make you bigger. Okay, oh, that's a little too large. And here we go. Although we are a corporation chartered by Congress, and although our conservator is a U.S. government agency, and the Treasury owns our senior preferred stock and a warrant to purchase our common stock, the U.S. government does not guarantee directly or indirectly our securities or other obligations. Our common stock is still listed on the New York Stock Exchange under FNMA, et cetera, et cetera. So what's kind of interesting is they didn't even have to do these annual reports, but they voluntarily started doing them in March 2003. And once you start doing the reports under the Act of 34, you have to keep doing them. So is Fannie Mae a direct obligation of the U.S. government? No, the U.S. government does not guarantee directly or even indirectly our securities. What happens is the Treasury likes to put money into a financial institution or a bank by buying senior preferred stock that converts to common, so that the operations can use the infusion of capital to get back on their feet. And right now, no other dividends can be paid except if the Treasury signs off on it, which means their stock is the only preferred or common that's going to get a dividend. And hopefully, operations will improve, the common stock will go up, and then Treasury will actually exercise their right to buy the common stock for a set price. They'll make a profit and, quote unquote, return it to the shareholders. So that's the answer to that. And keep this one short and sweet. But is Fannie Mae a direct obligation of the U.S. government? The answer is no. Not even after the conservator has been placed over them, and even though Treasury has now purchased and committed up to $200 billion to buy the senior convertible preferred stock, they are not a direct obligation. For more information on the exams, any of our websites here, past the 7, 65, 6, 66, or 63.com. That's all the time we have right now. Thank you.